Hey, this is June from Turning Point Life Investment, and this is your weekend analysis for January 30th, 2009. What we're going to do this week is take a step back, take a look at the market from a 10-year monthly view. Every now and then I would like to do that just to get a broader perspective of what the market is doing in the grand scheme. So, as I mentioned, this is a 10-year monthly view. Each candlestick is 1 month. Now, you would notice that this month created a dark candlestick, and actually it created a bearish reversal candlestick known as a bearish engulfing pattern. Okay, so we have a reversal pattern in addition to stochastic being overbought, and especially coming right here, ending right at this 50-month moving average. So this is telling you that we are very likely going to experience a change in trend this coming few months. Okay, so I'm just pointing things out. I'm pretty sure you already know this already, but I like to show you that the technicals are confirming that there is a longer term change in trend towards the downside as of right now. Okay, next we zoom back into a 6-month daily view. So you'll notice we've continued lower this week. I expected some kind of a relief rally to happen this week, but we didn't get that. We got only a few days of sideways consolidation, and then Thursday and Friday continued lower. One thing you want to take a note of is volume has definitely increased towards the downside. Okay, so that's something to be mindful of. That's another sign, confirming sign that the trend is starting to change, and as well as looking at the stochastic, there's definitely more downside momentum. One thing you do want to take notice of is that stochastic is approaching oversold, so it's getting a little bit stretched out towards the downside. Now, that doesn't mean that the market has to turn around. It can still continue lower, but I do still expect some kind of relief rally to be coming soon, hopefully next week. Okay, now, when we look at the chart, I mentioned that support or gaps always make for great support and resistance, and in this case, it makes for great support. So that's why I expect some kind of bounce, some kind of relief rally coming because, well, we retested the support area right here. If it breaks lower, then the next target that I'm shooting for is somewhere around the November low. Okay, so I would shoot for this one if this 107 gap is broken. But as I mentioned already, that I do expect some kind of bounce towards resistance, maybe around 111 or so. Okay, so I will look for that as a shorting opportunity into this market. If it drifts lower, I'll probably won't chase it because it looks pretty extended towards the downside. But anyway, I'll still look for some kind of bounce towards higher. Overall, in terms of trading, I just want you guys to really pay attention to what the market's doing. It's changing its course right now. Okay, so what has worked before, which is buying on the dips, right? Notice how every time the market pulled back towards support, buyers came in. It's no longer doing that. Okay, so you can't be using the same strategy for a different market. The market is changing course right now. So that means your trading should change as well. Rather than waiting for the market to come down to support and buy, you should sell at some kind of support and wait for it come back to resistance and short again. Okay, so you have to be dynamic. You have to be able to switch your strategies according to what the market is doing. Okay, rather than doing the same thing for different types of markets. So right now, as I mentioned, it's changing its course, so you should be prepared to be able to trade to the downside if that's your game. If not, then I'd rather you stay out of the market instead of trying to pick up stocks to play to the upside.